Today's episode of the Aussie Share Trader is proudly brought to you by this basic looking orange cat.
Hey, g'day YouTube. Hey, I was just doing a video here. I just finished it, but look, it's pretty boring. I just thought I'd better warn you. So I'm sitting here looking at a stock, and it really is just my internal dialogue out loud. I'm looking at balance sheets and just sort of explaining what I look for. And what I'm trying to do, just by looking at the balance sheets, I'm trying to establish a story of perhaps if this is a good stock or a bad stock. Now, I'm looking at the last 6 balance sheets of the last 3 years, actually the last 7, so the last 3.5 years worth of balance sheets out of the half yearly and yearly reports, and pulling out figures. And as I said, trying to sort of establish a bit of put together a bit of a picture of how the business is actually performing without looking at anything else to do with the business. I haven't read what the directors are saying. I haven't even looked at the cash flow statement or the profit and loss statement. I've only just looked at the balance sheet, the assets and the liabilities. So I think this is a great place to start when you're looking at the business for the first time, and it's a common question I get, where do I start? And this is a good place to start. And if you can just start to build a picture, and then you can start to put all the other pieces in and establish whether this is a good stock that you want to be a part of, or the stock that you just don't want to be a part of, or perhaps it's a really bad stock that you might want to play to the short side. So anyway, watch the video, so I'll give you a bit of a warning. It's a little bit mundane. As I said, it's just sort of me talking to myself, and you might get something out of it for the weekend. I'm just sitting here. It's about 5 hours to game time. Go the Tigers. Hopefully we can beat the Cats tonight, make it to the grand final next week. That will be good. Other than that, it's Friday. Always happy Fridays. Have a good weekend, guys. As I said, up the Tigers, and I'll talk to you next week.
Hello YouTube. Now today, what I want to do was give you an idea of where to start when looking at a business for the first time. It's probably the most common question I get, is I don't know where to start. And this is as good a place as any to start when looking at a stock for the first time. Now, what I have here is a balance sheet or a statement of financial position or an assets and liabilities. Basically, what this is a snapshot of where a business is at a given point in time. Now, when a company produces their report, either their half yearly or their annual report, the statement of financial position, I like to call it the balance sheet, will be buried somewhere towards the back. But it really is a great place to start, just to get an idea of where the business is at right now, and then you can compare it from this position to years gone back, which is what I'm going to do here today. So when I'm looking at a business for the first time, what I like to do is just have a look at the balance sheets over maybe the last 6 or 8 balance sheets going back 3 or 4 years. So I decided to do that with a business called Speedcast, which has been in the news a bit recently, apparently, because obviously their share price has been plummeting. So we start here. This was back in the first half of 2016. Now, Speedcast is a business that reports for the calendar year, not for the financial year like most businesses do. So the half yearly report come out to the end of June 30, 2016. Okay, so this is, we're going way back here. This is the balance sheet going back to the middle of June 2016, so the half year. Now, what we want to look for is just, well, we look at all the figures, but we want to see the changing figures over time and see if there's any figures in there that may cause some alarm and that may give us hints about how this business is going. Okay, so you can see that the first line is the cash. They've got 26 million there. This is US dollars and thousands, so that 26,000 is 26 million US. Trades and receivables, so 50 million there. When I look at trades and receivables, I always just duck down to have a look at the trades and other payables as well in the liabilities, just to see if they're reasonably close. and so it's 50 million in receivables and 75 in payables. Close enough. You know, if there was a really big discrepancy in those two, that could be a cause for alarm. What we've got here: interest in joint ventures, property and equipment, goodwill and intangible assets. Assets 116 million. So that's that could be high for a business of this size, depending as well if it is mainly goodwill or if it's mainly intangible assets. Goodwill can be a concern because it really has no value over time. Goodwill is it's an accounting term that goes into a balance sheet when a company buys another business and they buy the assets, and then whatever's left over is basically goodwill. Okay. Okay, so that's the total current assets is 240 million. Now liabilities, so trades on the payables we've looked at, short-term borrowings there. So this is the current liabilities, so generally due within the next year. So nothing too alarming. And total borrowings 120 million. Okay, so the net assets is 31 million. That's I would say a little bit light on when the goodwill and intangible assets, which could disappear tomorrow, the goodwill part of it anyway, is only worth is at 116 million. So that one asset there, which can disappear, is worth more than the net assets. Maybe a concern, but let's keep going. So that was back in the first half of 2016. Now the full year 2016. Let's look at that. So cash and cash equivalents, trade and receivables, that's gone up. That may mean that the business is growing. We'll have a quick look down here at the payables, 64 and that's 63, so about the same. So no reason for concern there. Inventories. Now this one here, other financial assets, funds held in escrow, 422 million. Now I assume, I don't know this, but I assume that they were going to buy another business, and they've got, either they borrowed money. Let's just go back and have a look. What were they owing? 120 million in borrowings there, and the next year they had 360 million. So they've got about, what's that, 250 million in extra borrowings there. That doesn't account for the 422 million in escrow. So what probably happened, we obviously can go back and look at the full report later, but what probably happened is they did a capital raise as well as borrowed extra money to buy a business. That's what I would think, just by looking at that. Everything else down here looks pretty straightforward. Okay, so obviously the borrowings have increased quite a bit, but that may be for a good reason. So total equity is showing as 290 million, keeping in mind that we've got this big lump of 422 million there. Like I say, that it's probably from a capital raise. So that was full year 2016. Now let's keep going. 2017, this is the middle of 2017, so cash and cash equivalents 49. Trades and other receivables, see that's actually growing, as well as the trade and payables around the same figure, 131 to 137. So they're growing, which generally means that this business is growing. Well, the sales are growing at least. Okay, so now what we can see here is that there's now a big chunk of goodwill and intangible assets there. So what's probably happened, you can tell from that, is they've bought a business and there's a big chunk of goodwill that's gone in there. So now their total assets are 847 million, keeping in mind that nearly, well, 526 million of that is goodwill and intangible assets. So really, their assets, their tangible assets are around 300 million, and now their total liabilities are 550 million. So it's showing net assets of 296 million, but you got to be a little wary of that figure because there's so much goodwill sitting here now. Okay, so that's back in June 2017. Now this is December, so this is the full year figures. So still got cash there, trades and other receivables growing a little bit again. What's we got here? The goodwill has grown again, so they may have even bought another business perhaps. And as you can see, the borrowings have increased as well. What were they? Last half they were at 371 and now they're at 432. So another 60 million in borrowings have gone on there, which may attribute to that goodwill that has also increased. Now, so I mean, you can sort of get the feel that this is a business. You can see the sales are growing by the receivables and payables increasing, but you can also see that they're expanding by, looks like they're trying to buy businesses and they're taking on debt to do that. So while their total equity may look like it's increasing, in reality it really is the goodwill portion that is increasing. So that could be a cause for concern for a business. But let's keep on going. Okay, so now the trade and receivables at 171, payables 196, so that's still growing okay. This is the middle of the half year of 2018 now. Goodwill and intangible assets, so that's 606. What was it last half? It was 623. So it's gone down a little bit. That could be just a bit of a write-off of the goodwill. So total assets showing at 988. Borrowings are now at 469 million. What were they last half? 432, so they've gone up again. Okay, so the total liabilities 703. So the total equity, the net assets, 284 million, of which they've got 606 million in goodwill and intangible assets. So it doesn't seem to be improving from that point of view. The only thing that seems to be going up is this goodwill here. Let's keep going. So now this is the full year 2018. So we've got trades and receivables are now 232 compared to 252, so they're still pretty much aligned and growing. Generally a good sign. That means the business is actually growing. But what is also growing is this figure here, now 710 million. So they would have probably made another purchase. I mean, what we would do eventually is we would go and have a look at the notes. So you can see that number 18 here. In the full report, we can go down and have a look how much of that is goodwill, how much is intangible asset. I would assume, without looking at it, that most of it is goodwill from business purchases. So what have we got? Total assets are now 1.2 million, of which 700 million is that goodwill and intangibles. Borrowings are now 625 million. What were they last? Yeah, they were 496, so they've gone up significantly again, which is a little concerning. Their total equity is sort of going down while their goodwill is going up. Yeah, to me that's a little bit concerning. That's a big chunk of debt sitting on their balance sheet now, without a lot of asset appreciation. Now this is the last 1.5 years. They've taken all the colour away. I obviously don't want you to look at it. So trades and other receivables are now 261, so they're still increasing. Payables 268, so that's okay. Now intangibles 537 million, so that has gone down. So I would assume there's been a pretty big write-off there of the goodwill, right down from 710. So it's about 180 million disappearing out of that. So total assets are now 1.1 million. Total liabilities are, oh my god. Yeah. Sorry, what am I saying? 1.1 billion, 1.1. Yeah, did I say billion? I meant to say billion if I didn't. 1.1 billion, and the total liabilities just over $1 billion. So the net assets now is 94 million, and we still have 530 million sitting in the intangibles. I haven't even put the goodwill there; it's just all intangibles now, which I would say is concerning. We'll have a look at the chart of this of this share. Now this is Speedcast. We look back here. What year is this? This is 2015. When did we start? We started in, when did we start? Let's have a look. The half year. So we started in about June 2000. We'll come out in August. So let's go to August 2016. So here. So we first started looking here. The business was worth, what were we paying? About $4 a share. So it sort of went down. Not a lot was happening with the business. Then, probably was saying August 2017, a year later, all of a sudden, it's gone from mid-threes to mid-sixes, getting towards $7. So the share price has nearly doubled. And just to take a look back, so that was what we're saying. So that was 2017. So half year and full year. So 2017, we want to have a look at them. So half year, where did it go? There it is. Yeah, so this is when it was making those big purchases, and obviously the market was pretty happy at the time. Borrowings were 371 million, and they were still happy at this point. Borrowings there, so they become unhappy with this report here. That would be the first half. Let's just go back and have a look. No, it wasn't that one, it was the one after. So they become unhappy here. That's when the market decided that this business was spending a lot of money. It was growing, but it wasn't actually getting any building any equity. And it's, I mean, equity in the business is the same as your equity at home. You know, you want to be able to do things and make asset purchases, buy things that in the short term you got to use your cash. You may borrow money to buy a house, but over time you want to see that your actual equity is growing. And the problem with Speedcast is they're doing all this borrowing of money and buying assets, but they're not actually growing their equity, which is a concern. And obviously the market has not liked this, and they decided on this particular report that they'd had enough, and they started to sell this share off quite viciously. If you look here, it went, that particular, is this daily? This is daily? Just weekly? I can't even see the date. Whatever it is. 20, no, it's weekly. So that particular week there, when that report came out for the middle of second half 2018, you can see the share price went from 680 down to 390, and it hasn't got any better because the share price has continued to plummet. And looking at the most recent, which we did, the most recent half, there's no reason why you would be getting excited about this business. $650 million worth of debt, and while the income is growing, the equity isn't. And yeah, there's a lot of reasons to be a little scared of this business. Look, I wouldn't be putting my money into this business, put it that way. And there may actually be money to be made here on the short side, even though the business has already come down from, what was it here, 680 down to today, what is it, $1.20. So it's already down a long way. But this business could have a lot further to fall. Zero's still a long way away. But an interesting one to follow. So the point of this video was just that you can get a snapshot of how a business is going, even if you didn't look at the chart first. Just get the balance sheets, which is easy enough to do. I just do it off ComSec and just print off the balance sheets or save them as a PDF out of the half-yearly and yearly reports, and just sort of build a bit of a story without even knowing anything about the company, what it said, you know, what it's bought. You don't know anything about that, but you can actually build a story about this business. And then, you know, if it looks something that you want to know more about, you can go back and look at the reports and learn more. and see if you think it's actually value at current prices or not. It may be a shorting opportunity. Perhaps this one here is, I wouldn't want to be buying a share like this at any old price, to be honest. Interesting. No worries, guys. I hope that made sense. I hope I come across well enough. If you have any questions about this, give me a call. Or sorry, don't give me a call. Pop me an email, or give me a call, whatever. Look, as I said in the beginning, this isn't the place to end it. This is just the place to start. So it'll give you some sort of idea whether you need to investigate this stock further for an opportunity, either on the long side or the short side. And as I said, this one looks a lot more to the short side than the long side. No worries. I'll leave it there. Thanks for watching. The Tigers, they're playing tonight. They've got the Cats. Good luck to the Tigers. Hope we can do it and make the grand final next week. Yes, it'll be exciting if we can. But anyway, we'll see how we go. Thanks, guys. I'll talk to you next week.